Okay, good afternoon, everyone, and welcome to Lotus Pharmaceuticals 2024 earnings call. This is Yoling from Corporate Communication of Lotus, and thank you for joining us today. So on today's call, we are pleased to have our CEO, Peta, and our Group CFO, Beatrice, here with us. They will provide insight into a strong result we have achieved in 2024 and share updates on the progress of our key initiatives. So we encourage you to submit any questions you may have through the online platform at any time during the call. And I will read your questions to management during the Q&A session again. So now I'd like to turn the call over to Peta, who will begin with an overview of the 2024. Peta, please.
Yeah, thank you, and good afternoon also from me. Good afternoon to all shareholders attending the meetings, as well as everyone else interested in Lotus Pharmaceutical, and special thanks to our hosts from Yuanta for organizing the event. Agenda for today, we have three sections in our presentation. I'll start first with the business highlights for last year, obviously, and then Beatrice will continue with more in-depth information on the financials for 24, and then I will finish the presentation with the business outlook for 25, and this will be followed by a Q&A section. So starting with the business highlights for 2024, I'm very happy to have the opportunity to report today that Lotus has delivered amazing results for 2024. So 2024 has been so far the best year in our history. So for the 6th consecutive year, we have delivered double-digit growth both on the top line as well as on the earnings. Last year, in 2024, we reached out revenue of $18.6 billion, which is representing 10% year-on-year growth, and EPS of 19.35, which is representing 23% year-on-year growth. We have also finished the year with a significant amount of cash, $6 billion, and also a similar amount in committed borrowing capacity. The company is leveraged less than 1 time, and with EBITDA margin of 42%, which is on the higher side for the industry compared to industry peers. This everything provides very strong foundation for future growth, which I would like to highlight here will come not only organically through growing the existing business, as well as launching internally developed product, but inorganically, and in the inorganic growth based on this cash position that we have now, and again, the borrowing capacity and the trust in our business from the investors. We can go not only through BD opportunities as well, but also through large M&A transactions. So going through the 2 pillars of our business, in 2024, Asian business achieved 5%. Sorry. So in 2024, our business in Asia achieved 5% year-on-year growth. The largest contributor of the year-on-year growth was Thai market, obviously driven by Teva acquisition. As you know, we have completed this acquisition mid of 2024, and we effectively started to consolidate in our books the business from 1st of August. So we had effectively 5 months effect of Teva. This is quite successful acquisition. So what we are seeing so far since we took over the business, it exceeds our expectation and also exceeds the business case which justified the deal and was approved by Lotus board of directors. In Korea, we have seen also very good performance, especially from our key brands like Qsymia, Mercilon, Vista, significant growth, which exceeded our expectation. Taiwan also, we have seen very good growth from key branded products, as well as strong uptake from branded generic launches in Taiwan. So overall, Asian business perform very well. We launched 66 SKUs overall in Asia, and this obviously is paving the way for future growth in all markets, Korea, Taiwan, as well as Southeast Asia. Export business has been the strongest growth driver for the company in 2024, achieving 15% year-on-year growth. Main contributor obviously was lenalidomide in the US. So lenalidomide offset the decline in buprenorphine naloxone, and as we communicated on the previous meeting, we didn't expect much impact on decline of buprenorphine naloxone, especially on the earnings, because it's a relatively low margin product. So lenalidomide being with significant sales and increase of sales, of course, with high margin, obviously more than offset the buprenorphine naloxone. In 2024, in the export markets, we have launched overall 21 SKUs. This is obviously outside US market, which is also paving a way for the growth. Hello? Hello?
Yes.
Yeah, we can hear you.
Okay. All right. All right. So going through the update on the R&D. So currently we have in the R&D pipeline 26 projects, and we have completed basically 2 dossiers, azacitidine oral and palbociclib in 2024. I would like to highlight also that we have made significant progress on one product which is under development. So we passed a pilot study. So this is a product, it's a 505(b) product, oncology, and the targeted market is US as well as the rest of the world. So I'll talk more about this in the outer slides. In addition to that, we have finalized voclosporin. It's a potential first to file opportunity. It's a softgel product. So this product was, as you may know, submitted in January 2025. Beyond these submissions, we have initiated 10 new projects, majority of them, of course, in oncology, but we have also initiated the 3 other products, 2 in primary care as well as 1 in nephrology. Continuing with the R&D, important milestone for us, which we accomplished in 2024, is that we have finalized our new state-of-the-art R&D facility in India, in addition to obviously R&D center in Taiwan. Why India? It's a very obvious answer here. India is the best country in the world when it comes to pharmaceutical resources, especially on analytical development as well as clinical development. And this is what we need with the increasing focus on R&D, with our appetite more into going into more complex products in terms of formulation development, clinical development, analytical development, challenging IP. Definitely, we realize that we need more skill set, access to better resources. That's why we decided to actually open this R&D center in India. It's located in Hyderabad. This is considered as the best location for development center in India. It's a particular location of Genome Valley, is home to over 200 companies from 18 countries. Some of them are international, like, for example, multinational like Sandoz. Our R&D facility has around 20,000 square feet size based in a 15-acre campus, and is fully integrated with some of the most reliable names in the biotech and pharma industry. So I'm pretty confident that with this step we will achieve again much better efficiency and more successful outcome for our R&D going forward, because again we will benefit from the rich resources in India. Next slide. So going through the pipeline update on the business development, we have finalized 20 contracts. The highlights obviously are Teva acquisition business of Thailand. This is the again transformational deal for our business in Southeast Asia, not only for Thailand, and also the acquisition of AlphaChoy in Vietnam. Like we discussed last time, AlphaChoy is one of the most recognizable and well-established brands in Vietnam, and we had the opportunity to acquire the product from Sanofi. As you know, we signed the deal last year, and effectively we closed the transaction early this year. So the product is already launched from Lotus perspective. So it's a transformational deal for Vietnam and overall Southeast Asia. In addition to that, I would like to highlight 3 co-development deals which we finalized successfully in 2024. These are 3 exclusive agreements for potential first-to-file opportunities. LP797 is the first and the only approved therapy for desmoid tumors with orphan drug and breakthrough therapy designation. This product has potential first-to-file opportunity in the US. It's NC-1 filing, and the peak year sales of the brand are forecasted to reach $1.2 billion globally. 2/3 will be in the US market. The second product is LP786. It's a first-line therapy for ER-positive, HER2-negative metastatic breast cancer. Similar to the previous product, the potential first-to-file opportunity and NC-1 filing, the forecasted brand sales are the peak are estimated to reach 1.6 billion globally. And the third product is highly complex from a formulation perspective. Is first FDA-approved treatment for IgA nephropathy with very specific release technology and complex formulation. And it has also very strong potential not only in the US but also in other markets like in Asia. The global peak sales of the brand are forecasted to reach $800 million. I think this co-development focus is very important. Our intention to go into a co-development is to partner with companies which has access to either different technology or sometimes they have IP position by having, for example, developing non-infringing active pharmaceutical ingredient. And again, this allows us to capture opportunities and to not to limit our pipeline selection only to products which we can do in-house. So you will see this more going forward, I'm pretty sure, next year. So going through the update on the regulatory submissions, regulatory affairs, and launches. The key highlights in terms of submissions, we filed azacitidine oral and palbociclib capsules in the EU. So these are very important projects. Also, we have filed bosutinib in EU, afatinib in Israel, and quadribine in Turkey. as well as nintedanib soft gel across Latin America, Switzerland, Mexico, New Zealand, and Australia. So these filings are very important and actually reinforcing our commitment to bring high quality products to patients worldwide at affordable price. We have now also received approval for enzalutamide soft gelatin capsule in UK, also Vietnam, and several South American countries. Also, we have received approvals for pomalidomide in UK, Switzerland, Israel, and EU markets, which is obviously paving the way for launch in 2025 based on patent expiry. And in addition to that, our flagship product as a product launch in the next 5 years, nintedanib, we have received approvals in Canada, UK, and basically all European countries. I'm continuing with further updates. In terms of organizational development, we have done several important appointments and reorganization of the company. I think this is obviously in line with our growth strategy, with what we have achieved so far, what we want to achieve going forward. So we realize that we cannot continue in the same manner as a structure. So we have appointed the Chief Commercial Officer to lead our commercial operations in Asia. I think with this appointment and obviously with the person that we have concluded as a hiring, we have very strong control on the business of Asian markets and also opportunity to utilize growth from existing products as well as maximizing the growth from new product launches. Similar to that, we have decided also to appoint Chief Operating Officer to lead manufacturing, supply chain development, quality, as well as procurement. So these are all important stakeholders in the value chain of any pharmaceutical company. Similar to Chief Commercial Officer, we have appointed a very strong person internal with outstanding track record behind him, and I'm pretty sure that this will help us to maximize the opportunity when it comes to not only our internally developed products but also products that we are sourcing from CMOs. Last but not least, we have appointed Vice President of Portfolio. This is a critical role, and we believe in Lotus that one of the things which makes difference between companies, especially now and going forward, are really products. So by having a strong person on board, I think we have more confidence that we will have ability to take the right decision when it comes to pipeline, not only for in-house but also for BD. So we are investing hundreds of millions in pipeline. So I want to make sure that we are again taking the right decision and maximizing the investment for the company and for shareholders. On the quality compliance, it was really good year for us. So we had a number of health authorities, GMP inspections of Lotus manufacturing sites, and as well as our CRO in India, which were concluded with positive outcome. Inspections like US FDA, also Korean authorities, Taiwanese authorities, Anvisa, which are Brazilian authorities. Again, everything went very well and demonstrates our capability and focus on quality and compliance, which are obviously critical success factor for the business. Also, I would like to highlight that we have completed on time the insourcing of Cialis. Originally, we were relying on supply chain from Eli Lilly, and within a short period of time, we managed to transfer the product in-house. It's manufactured currently at our facility in Taiwan, and also we are sourcing more economic APIs. So by doing this, we have achieved significant improvement on gross margin, respectively translating into upside on the company earnings. And last but not least, we have also achieved direct material savings of $5.2 million, which significantly exceeded our target for 2024. We also made a great progress in sustainability with our MCCI ACG rating improving from triple B to A, which is reinforcing our commitment to responsible business practices. When it comes to industry recognition, we are proud to be named one of Asia's best company to work for by HR Asia for the third consecutive year. Also, we have been awarded LinkedIn's Diversity Champion, as well as honored with the 2024 Taiwan Bio Award for Outstanding Company of the Year. And on the top of that, our focus on operation excellence earned us an OPEX Excellence Honorary Mention Award for Best Process Improvement Project. This is related with enzalutamide softgel capsule. So these awards obviously reflect on our strong operational focus and also intention and drive to achieve progress in all aspects of the business. So I'll continue with the update on the global rollout of commercial products. We are on track with the key products here. I'll just highlight a few of them. Enzalutamide, we have already launched 11 products in 11 markets, and 15 are to be launched in the next years. And like I mentioned, we have already launched the product in several Latin American countries. Unfortunately, we could not launch last year in UK because our partner failed to invalidate particular patent, which was constraining, but this is still target, and it's a work in progress. Again, we are ready to support the launch. It's all about invalidating relevant patent here. Pomalidomide we launched already in 5 markets, and like I mentioned, we have the approval, and as we speak, we are preparing for the launch in EU and a few other markets. Nintedanib is going to be our biggest launch in the 5-year plan coming from internal development. So we have basically global coverage through partners and also through Lotus commercial entities, and we are preparing as we speak for this launch. Next slide. Azacitidine, also very important product which we filed last year. This has been quite challenging as a development because the bio study had to be done on patients, and because it's a highly toxic product, so it's a toxic product, so you cannot do it on healthy volunteers. But I'm proud from the fact that Lotus probably the first company that successfully developed and finalized dossier for generic oral azacitidine. Similar to that, palbociclib, it's a very big product, sizable, 1.4 billion revenue. So we finalized the development last year, quite challenging formulation, and we filed the product on time. So for voclosporin and Rux, I will give you more details on the later slides. In terms of R&D pipeline, so currently we have 26 products under development.
Yeah.
Majority obviously are in oncology. We have 6 programs in primary care, lifestyle, and 1 nephrology. If you look on the right side, significant portion of these products represent first file opportunities, 38, which is rather high. The good thing is that we have now also enrolled some 505(b)(2) products, so they represent 8% of our pipeline in internal, and the rest are products which are suitable for launch on day one, which means on patent expiries in the relevant markets. Next slide. When it comes to business development, so our focus, like we discussed on our previous meeting, is to bring innovation to Asian markets. So we are targeting in licensing or product acquisition for Asian markets which we are present, like Korea, Taiwan, Southeast Asia. For the in-licensing, we are focused on late stage developments, products which are already under phase 3 or plus successfully phase 3 and under registration, or recently approved or launched in US and Europe. So we are typically not taking risk investing in products which are early stage, like phase 1 or phase 2 assets, unless they have again proof of concept. The key therapeutic area here is basically we have a number of products on primary care and lifestyle. Of course, oncology is quite important. CNS, we have also programs in women healthcare and nephrology. And collectively, these products represent a peak annual revenue potential of over $133 million. So we are quite excited to having this pipeline of business development opportunities. With this, I will hand over to Bjartur to go through the financial results.
All right, thank you very much, Petar. Good afternoon. So let me first begin by summarizing our performance in 2024. Once again, Lotus delivered on its promises and staying true to our commitment of executing our plan with precision. So over the year, we added approximately 1.6 billion Taiwanese dollars in global revenue, reflecting a solid 10% year-on-year growth. I will delve deeper into the revenue breakdown in the later slide. Gross profit for the year grew by 16% compared to 2023, reaching 10.9 billion NTD, with a gross margin of 58.8%, which was an impressive 3.5 percentage increase from the prior year. This improvement was driven by a favorable product mix with higher contributions from our branded portfolio in Asia, as well as the oncology export to the US and other global markets, while we saw reduced revenue from low-margin products such as generic Suboxone in the US and other commodity generic products in Asia. Operating expenses for the year totaled at 4.9 billion Taiwanese dollars, reflecting a 9% year-on-year increase. Half of this increase was due to equity-based compensation costs driven by share price, while the other half came from increased payroll costs as well as higher R&D investments. These R&D expenses included also costs related to the now terminated NRX-101 project, which was a 505(b)(2) R&D initiative that we decided to discontinue following less than optimal clinical readouts mid of the last year. So despite of those increases, our OPEX to revenue ratio remained steady at 26%, consistent with that of the 2023 level. The operating margin improved by 3 percentage points, rising from 29% in 2023 to 32% in 2024, supported by our focus on the higher margin products, as well as disciplined cost management. On the non-operating side, net financing costs decreased about 11% from 526 million in 2023 to 469 million in 2024, primarily due to higher interest income from a significantly larger cash position. So other gains increased about 11%, driven by investment income, as well as favorable foreign exchange movements between the US dollars and Taiwanese dollars. And the company's effective tax rate remained stable at around 20%. So overall, net earnings grew 23% to approximately 5 billion Taiwanese dollars, translating to an EPS of 19.35. And the board has recommended a cash dividend of 5.73 per share, up from the 4.66 per share last year, representing a year-on-year increase of 23% on cash dividend. And the total dividend payout is estimated to be approximately 1.5 billion Taiwanese dollars, or about 30% of last year's net profit. And the remainder will be retained to fund future acquisitions, expanding our global footprints, investing in facilities and R&D, and of course, reserve for debt repayment. That is all aligned with our consistent dividend policy of the past few years. And the average yield of the proposed dividend is 2.12%, comparing with 1.65% last year. Moving on to the next slide. So now let's take a closer look at our revenue in 2024. So in Asia, our business grew by about 5% overall. Korea added about 164 million in revenue, reflecting approximately 3% growth. Key brands in Korean marketplace show very strong momentum, and with Qsimia growing almost 37% year over year, and Mercilon up 42%, and the Avista, which is also Osteoporosis brand, rising about 25%. However, this was partially offset by lower revenue from commodity generics, as well as income from the royalties and licensing. As well, the depreciation of Korean won against Taiwan dollars had the effect of muting the growth in terms of reported currency, which is Taiwanese dollars. In Taiwan, our domestic business grew about 4%, reaching approximately 2.5 billion in 2024. About 68% of Taiwan's revenue now came from brand products such as Cialis, Aclasta, Linta, and so on, while the generics made about the remaining 1/3 of the revenue. Our brand portfolio grew approximately 0.3%, and the main reason was the price erosion on Linta, offsetting growth in other segments, including the growth in Aclasta, Osteoporosis, and Zepzelca, which is the new generation of new chemical entity in the small cell lung cancer. And our Southeast Asian cluster delivered approximately 1 billion in revenue in 2024, increased from only 270 million in 2023. That was driven by the addition of the Teva Thailand business starting from August of 2024. And further, we're aiming now to double our SIA cluster revenue to approximately 2.2 billion in 2024, supported by contributions from Alpha brand and a full year of combined Thai operations. So our export businesses grow by about 15%, with the US adding nearly 1 billion of revenue, and the rest of the world outside of the US contributing additional 245 million in revenue. Lenalidomide revenue grew by almost 2 billion, up almost 60% year on year, while generic Suboxone declined by 1 billion Taiwanese dollars, or about 30%, due to intensified competition. Outside the US, growth was driven by demand of our lenalidomide in Europe and in Latin Americas, and very strong performance of Vidorib soft gel, and as well as a launch in early markets of the generic enzalutamide, which is a prostate cancer treatment. So next slide. You can see our revenue sources remain very diverse and balanced. In 2024, 48% of our revenue came from export outside of Asia, while 52% came from our Asian home markets. The US continues to be our largest single market, contributing about 42% of our group's revenue, and followed by Korea and Taiwan. And oncology remained our cornerstone and accounting for nearly half of our total revenue, while CNS, primary care, lifestyle, each contributed about 20%. And now I think it's time to give an update on the performance of our obesity market in Korea, and which is a very important obesity market globally after the US. Our flagship product, Qsymia, maintained its very strong market position despite the launch of Novo Nordisk's next generation obesity treatment, Wegovy, that was launched in Q3 last year. As we expected, Wegovy largely cannibalized the sales of Novo Nordisk's early product, which is also a GLP-1 treatment called Saxenda, while the prescriptions for our Qsymia remained relatively stable. And the significant lower cost compared to GLP-1 therapies has been a key differentiator, particularly for a treatment like obesity, which requires continual monthly dosing. And this trend in Korea also mirrors our partners' experience in the US, where Qsymia has successfully competed with a larger and broader range of GLP-1 options. And now, finally, let's talk a little bit about cash and debt. In 2024, the company generated 7.5 billion NTD in cash from operations before paying taxes and interests. Net cash from operations after the payments of tax and interest came to approximately 6.2 billion Taiwanese dollars, which is a 4.5 billion increase from prior year. And we closed the year with a robust cash position of almost 6 billion. Our net interest-bearing debt stood at approximately 7.4 billion, which is very much consistent with that of 2023. With the EBITDA growing over 20% from the 6.4 billion the last 12 months versus the 2024 12 months of 7.8 billion, our leverage ratio improved from 1.49 times in 2023 to 0.94 times in 2024. So our business also showed a very high EBITDA margin of 42%, underscoring our very strong profitability and the position of Lotus as one of the most profitable companies in the industry today. So with that, I'm going to turn back the floor to Peta to go over the outlook of 2025 and beyond.
Okay, thank you, Bertur. So talking about the future, I mean, we have a significant number of launches, which is coming up in the next 6-7 years. You can see here, more than 80 products are scheduled to be launched from 2025 to 2032. The peak year of launches will be 2026, where we have 17 products overall, combination of BD and R&D, and 2028, 18 products. The outer years, the numbers are less, but basically we are working as we speak on the outer years with gaining more and more progress on the internal development as well as on the business development in licensing. Once we have completing milestones like dossier readiness, like signing the deals, obviously this will reflect on significantly higher numbers from 2029 onwards in terms of launches. So it's a lot going on as an effort, and all the efforts, also the resources that we are investing in pipeline, both development, internal, as well as business development, is translating nicely in number of launches. So 18 launches is extremely high number for any company comparing with our peers. So we are very excited about that. On the right side, I mean, you can see that the potential for R&D products that we are developing, internal products in terms of brand sales. The total addressable market size is more than $35 billion by 2032. So these are typically high value products, and of course they come with challenges when it comes to development, also sometimes manufacturing and market access. I refer more to IP, but with the skill set, the knowledge, and also the investment now, I refer here to the R&D center in India. Also appointment of very experienced individual to lead our portfolio. I'm confident that we can execute on these programs. So let me now walk you through some of the key growth catalysts that we'll be focusing on the near term. I'll start first with the first of our opportunities. So we are making good progress for the internal development. As you know, in January we filed the NDA for voclosporin. One of the first of our candidates we are targeting for the US market. So this is actually our second first of our filing. If you remember, midostaurin was the first one. So we anticipate a decision from the brand in April 2025 on whether they will pursue litigation. Voclosporin is the generic version of Lupkynis. It's an immunosuppressant used to treat active lupus nephritis, so it's a nephrology as an indication. The forecasted sales of the brand peak are around $250 million. And again, this is one of the first products that we have completed in this segment, first of our opportunity. I'm pretty sure there'll be much more going forward. And like I said earlier, we have a significant number of first of our projects under our internal pipeline development. The second thing is on the 505(b)(2) internal development. We have a program which we call LP757. This is one of the first products that we are developing in-house based on a 505(b)(2) pathway for the US market. We passed successfully pilot study, and we are currently awaiting pivotal study results. So they are due Q3 of this year. This product has significant revenue potential compared to what we have achieved with lenalidomide in the US. And if we are successful with bioequivalent studies, we anticipate launching the product in Europe in 2027, followed by a US launch in 2028. And again, there's a lot of interest here in this product because of the size, because of the fact that we have a particular IP position. And I'm pretty sure that it will be easy to find the right commercial partners in US and the rest of the world. Just I want to highlight here that Alvogen doesn't have a sales team in US for oncology products. Therefore, we are discussing now with other companies because 505(b)(2) requires promotion, therefore sales force. So we are discussing with 3 companies which have sales team in oncology. The next pillar, which is very important, short term in licensing in Asia. So we are quite excited because we are very close to finalize agreements for 3 innovative products which we'll bring to Asia. So 2 of them are new chemical entities, and the third one is 505(b)(2) product. I'll start first with the first one, which is ADHD treatment therapy. So this is obviously falls into CNS category. It's a product which is already approved by US FDA, and product is on the market with quite substantial sales. And it has offer very high efficacy with less side effects. And I would like to highlight here that one of the key value proposition for the product is that there is no risk of abuse. So it's indicated for adults, adolescents, as well as children. So clearly, ADHD is therapy which require is a segment which especially in Asia is missing products. So we are quite excited to bring this product. So again, the contract is at the final stage. So once we sign it, obviously we'll announce it. The next product, which is also a CNS, is a Parkinson treatment. As you know, we have a very strong franchise in Parkinson based on Orion deal. So this is a 505(b)(2) product, which has been approved in the US recently and already launched by the licensor, and it's doing extremely well. So we have again very advanced negotiations and very close to execute agreement. So we are quite excited to bring this innovative formulation, innovative product, which will fit very well with our specialization in Parkinson in key markets like Korea, Taiwan, also Southeast Asia. And the third product is more about lifestyle. It's actually innovative once daily eye drop for treating presbyopia. So presbyopia is age-related loss of near vision. So this product, I would say, is a revolutionary product. So it's a true innovation. So this product is likely to waive the need for wearing glasses or surgery for presbyopia. Our partner in the US, which developed the product, already submitted the product, and based, of course, on successful phase 3 data, and they're expecting approval and launch later this year. So we are quite excited from having opportunity to bring this product also to Asia, and again, we are advancing the discussion. So it's a matter of few weeks where we can finalize the deal. So combined, these 3 products have the potential to generate peak revenue, annual revenue here in Asia, based on our forecast, $60 million. And again, it's amazing to see this progress. And the good news, of course, is that we have many more under discussion. When it comes to product launches, our focus obviously is we are continuing with the new wave of launches for enzalutamide, which is one of our top products from internal development manufacturing point of view. We are also preparing as we speak for pomalidomide launch this year in EU markets as well as in Asia, and also nintedanib. So we are planning to launch to conclude the first launch by the end of this year, which will be Canada. In Asia, I think the key focus when it comes to launches is obviously Alpha Choice. So as I mentioned already, we have closed the transaction successfully, and we passed the regulatory antitrust approval in Vietnam early this year, and I can report now that we have effectively launched the product based on Lotus setup in Vietnam as of first quarter of this year. So for Aperture, we anticipate annual revenue of $25 million, and for the other launches, which I already mentioned earlier, around $58 million peak year revenue, obviously Italy being the biggest one. M&A opportunities, we are progressing well to finalize a transaction for Southeast Asia. So we are targeting to sign in April. So this deal was delayed from last quarter of 2024, and it's a basically portfolio acquisition deal. So I think it's quite good business, and it will reinforce our position in one of the key markets which we have in Southeast Asia. Moving to the financial outlook for 2025, in terms of revenue growth, 24 again total revenue reached 18.6 billion. For 2025, we are forecasting total revenue of 20.5 billion, which is representing 7 to 10% year-on-year growth. In Asia, we are expecting 20% growth, which obviously will be driven by key markets like Korea. We are expecting Qsymia to continue to perform well despite of the competition. So we anticipate 13-15% growth for Qsymia 25. Southeast Asia, we expect to exceed $2 billion NT dollars revenue in 25, which is comparable to the size of our business in Taiwan. The growth in Southeast Asia will be fueled by fully integrated Thai business after Teva acquisition, as well as obviously Alphachoy, and hopefully the acquisition that I mentioned in some of the Southeast Asian markets. When it comes to export business, lenalidomide export, mainly driven, of course, by US market, is expected to deliver double-digit growth in 2025. When it comes to buprenorphine naloxone, the business remains stable. We are basically conservatively planning for increased competition, which we think could lead to further price erosion and volume reduction compared to 2024. But again, buprenorphine naloxone is a very small contributor to our earnings because of the gross margin, obviously the lower scale already. So lenalidomide will more than offset this downside here. And as a matter of fact, we are seeing better start for the year for buprenorphine naloxone. We have for the time being around 10% purchase orders from our district partner Alvogen than what we have assumed in our business plan, which is good news. So in summary, again, our conservative growth estimates 7 to 10% year-on-year growth, and I think this is absolutely achievable, and we have very strong foundation to deliver on that. When it comes to gross margin in 2024, again, was 59%, 25. We are basically expecting a similar level of gross margin. In terms of OPEX, we expect the same percentage of revenue as in 24, which was 26%. Non-operating income and expenses, we anticipate non-operating income and expenses, including financial costs and investment income, to remain comparable to 2024. Of course, this is with the disclaimer that we are not accounting any potential contribution from ongoing discussions on M&A or product portfolio acquisitions deals. So with this, we conclude our update on growth catalysts and financial expectations for 2025. So thank you very much, and now we are ready to take questions.
Okay. Yeah. Okay. So now we have received questions from the investors in the chat box, and we'll start with the questions related to tariff. We'll have our CFO Beato.
Okay, I can start, and Peter, if you have anything, you can chime in. So, I mean, of course, we, as many other companies around the world in different industries, we're monitoring this developments very closely. And to date, there is no solid threat or opportunities that we can work on for real now. I mean, for the near term, for example, for our key product in Idomite, we do have a very significant amount of inventory just outside of the US border in Lotus's bonded warehouse. I mean, should we have any solid lead, these products can be cleared in the US custom in a matter of a week. And so we see in the near term, tariff or no, we don't see any particular concern. And of course, in the longer term, we can react to any real threat. I mean, an emphasis on real threat by moving the manufacturing to the US, for example, just as we created the backup manufacturing site in Europe. And this option is among many options that we are evaluating. And depending on which form the tariff threat comes, there are a number of things that we can do. In the real long run, I mean, the US trade policy does change a lot. And so I must point out, this whole issue is a potential concern for the entire pharmaceutical industry globally, as well as many other industries like steel and chips, computer chips. So, I mean, it is not a unique situation for Lotus, but, as I mentioned, we're evaluating a number of potential solutions depending on how the threat will come. And, one of them should be enough to get us ahead. Peter, do you have anything to add to that?
No, not really.
Yeah.
Okay, so next is about our Southeast Asia strategy and our goal for the Southeast Asia market, and also why we select Southeast Asia specifically, but not China market. Is especially China market has is a main market for the generics.
Yeah,
So
I'll take this question. I mean, why we selected Southeast Asia, obviously, it's a highest growth cluster of markets in Asia. If you see, I mean, if you compare with China, if you compare with also with Korea, Taiwan, Southeast Asia is definitely the growth champion. I refer to markets like especially Vietnam, Thailand, Philippines, Malaysia. So that's why we are focused there. Also, what we have concluded there is that the companies the business is quite fragmented. There's a lot of local companies which are lacking capability when it comes to developing product manufacturing, obviously with some deficiency on quality, lacking network to in-license products, what we are doing, for example, from US companies, because they don't have, again, network, they don't have reputation. So it takes a lot of time to bring this. So I think this creates obviously opportunity for us. What we are planning to do, I think we discussed this on one of our previous meetings, is that we want to have Southeast Asia similar to the level of Korea and Taiwan combined. And we have done already important milestones we have achieved important milestones in 2024, what we promised, Teva, Alpha Choy, and there's more to come. So I think we are on a very good track there. So of course, the strategy there will be more on the product acquisition, portfolio acquisitions. In licensing, of course, also, and I'm not also excluding M&A, yeah, as a more pan-regional M&A rather than just buying a local company. Why didn't we select China? I mean, obviously, there's, I mean, first of all, Chinese market is, I think, in my opinion, more about big pharma and local industry. So I don't see any successful international company among our peers with success in China. So there's nobody effectively. So I think we tried in the last few years with several products based on a B2B business model. It didn't work, in my opinion, mainly because of Taiwan, China, geopolitical issues. So we decided to focus our resources on other markets where we can create value for the company rather than just wasting time and resources on China.
Yeah, I think there's one part of the question is saying, how are we going to grow to Southeast Asia beyond the 5 billion? Just from a number perspective, just to supplement what Peter mentioned, we said earlier in 2025 we were targeting a 2.2 billion Taiwanese dollars of revenue, and based on this trend for the products that we have already developed internally or acquired, by 2028, without any further acquisition, we will be around 5 billion of revenue in Southeast Asia.
Okay, so the last part of the questions is about the outlook, like our revenue outlook and the gross margin outlook in 2026 and then beyond. So do you expect to maintain the double-digit growth in 2026 and beyond? If so, and how?
Yeah, I mean, yes, we are aiming at this, and it's not only that we are expecting, but we have done quite a lot of work on this. And what I have shown earlier, we have more than 80 products to be launched, and a lot of launches are obviously in 2026, which is very important year for the business. For example, Nintedanib, which is our biggest product in our internal development pipeline, is 90% of the markets we will launch in 2026, like US and European markets. So this product will deliver around $50 million in the peak year of sales. So launches will be one of the key pillars to deliver on the double-digit growth going forward. Of course, business development, this will come not only from internal development, but also business development. I mean, we have started actively to look into also M&A, and we are working on some leads now quite actively. So this could be, some of these projects could be transformational for the company. So obviously, should we are successful, this will for sure also pave the way for a very strong growth in the outer years.
Okay. The last question is about the payout policy. So are there any plans for dividend payment or share buyback given your financial position?
Okay. So maybe I take that. So for dividend payout, for sure. I mean, we have been paying out the dividend at the 30% of prior year's net earning since we turned profitable almost 5 years ago now. And so the point is, we believe Lotus is a fast growing company, and there is a lot of good use for cash investment to achieve high return investment for our shareholders, and this is more meaningful to deliver a high growth to shareholders through those investments rather than giving cash back to the shareholder, which is probably more a sign of a more mature company. And so we will continue for the foreseeable future with a 30% sharing of our prior year's profit, and this will be maintained at least for now. And in terms of share buyback, yes, very, very attractive share price, for Lotus right now, and we are considering and discussing with our board to create programs, to potentially buy back, shares to award our employees. And this has not been yet finalized with our board, but once we do, we will actually communicate that in more details. But this definitely makes a lot of sense to us, considering the current dip in the share price and the future potential cost of rewarding our employees.
Okay, I think that covers most of the questions, and we are going to end the call here. So if anyone have any questions regarding to our progress or any question regarding to this earnings call, please don't hesitate to contact me or our management. Okay, thank you, everyone.
Thank you.
Thank you. Bye-bye.
Bye-bye.